Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com, your leader in pure technical analysis, avoiding all that Wall Street hype. Today, Monday, May 5th, 2008. Just as we get started, folks, we are looking to do a webinar this coming Saturday. It'll be Saturday during the day, probably starting anywhere between 1 o'clock, 1 p.m. Eastern Time. So we'll have that date up for tomorrow so you guys can sign up, those that are interested. But again, we can really go over some hardcore technical stuff, even a little bit of the proprietary stuff. And I know you guys are all anxious to know how we've been able to call this market so accurately. So keep watch for that for tomorrow. We'll have it posted, and stay tuned. Now, let's talk a little bit about where we are in the market today. We know that the turn date started on May 2nd, and it's a turn date period, really, that we've isolated here, starting on May 2nd, which was Friday, continuing through the next couple days, including today. And so far, it's played out pretty well. And what do I mean by that? Well, we saw a gap up on Friday and a crap. And a gap and crap is the terminology that traders use for a market that gaps up and it just sells right off. And that's basically what we saw, although late day on Friday on the light volume, we did see the market kind of gain a little bit back and close positive, even though it was negative for most of the day after the gap up. So again, we saw the gap up, the pullback, and then today we saw a continued down market. We saw the indexes across the board pretty much losing 0.5%, give or take. The Dow was down about 88.5 points, NASDAQ down almost 13, and the S&P was down about 6.5. So again, the market is pulling back today. Now, over the weekend, we saw Yahoo pull the bid for, Microsoft pull the bid for Yahoo. That did give a little bit of a negative tone out there in the markets. You also had some uneasiness, I would say, in the market as traders and investors realize how much the market's run here, and really, where are we? When you look at the economy, things are not that good. I think people, at least from our perspective, have gotten too bullish in a too short amount of time, and we're going to go into the daily charts and show that. First, we'll take a look at the intraday. What you basically saw today was a light volume market, and it's getting tiresome to continue to see this type of market, but that's the way things are, and you got to roll with the punches. We saw an extremely light volume market again today, almost the lightest in months, and the market was choppy. Early, we had a nice move up here, as you can see, really going into the open. The market rallied and pushed up. But again, keep in mind, very, very tight range today. This is not a big swing for the market. Not like we saw in the rally days or the big collapse days. You're basically talking about 10-point range on the ES. It was up a ways, then it was down, and so forth. It closed down, obviously, off the lows, though, here at the close. So again, you had a tight range in the markets. Even on the two biggest moves in the day, still was not that big. But for the majority of the market, if you look right here, you see we were in a channel. You can see a pretty good channel right here. And just to draw that in, that's the basic channel you're in. So you had moves to the upper side, and here we broke that, but we never got above it. You see the reversal red candle right there, spiking down and taking out the whole green candle that they just had. So those of you that were looking to buy on the breakout, you wanted to see continuation on the next candle, and you really saw a reversal candle taking out the whole green candle there. Continued red, a little bounce, continued red, and then you got a little bottoming tail here formation or a little buy signal, and we moved right back into that channel. And you can see the constant trading inside of this channel, up and down every which way, and just basic trading in a channel all day. So again, light volume was the key in the markets today, which meant the volatility was non-existent. We basically saw oil and some commodities rally again, and now we're at the double top in oil. So now we have to reevaluate. All right, so we got the pullback. We had called for a pullback in oil. We saw a spike down in oil from about $120 to $111 on our call. And now we've come back to make a double top in this USO. And I'm going to flip to the USO just to give everyone a sense of where we are. We'll look at the daily first. So here's where we had called for the short on oil. You had a beautiful move down here. Then you got a little bottoming tail here, and off of that you spiked back up. Now you're at a double top. So the question is, you have resistance here. Do we continue higher or do we come back in? Is oil almost done here? I happen to think oil is just about done. It may have a little bit of a fake out, though, as it often does, to try to get the amateurs to jump on the long side with a spike. You know, I could see an intraday spike of a move higher here of $1 or $2 in the USO, and that would possibly fake out a lot of these long plays, long amateurs, giving everyone the idea, oh, it just broke the double top, jump on board, and then you see oil come in hard. Either way you cut it, though, the dollar has been strengthening, although it was weaker today. And you had some geopolitical events, and that's the problem with oil. There's constant geopolitical stuff going on all over the world, which causes spikes, whether it's in Venezuela, whether it's in the Middle East, and so forth. But it all can affect intraday or near-term moves. But again, right now you have the USO at a double top area. GLD was strong today here, but you're just getting a little bit of a reflective bounce here, and this is due. You had the GLD coming down this hard. You have to get a little bit of a bounce up. It's just a natural turn of events. Then you may see more downside possibly to this 200, but you got to continue to expect a little bit of support here in gold in the near term on the GLD, just because it's sold off so hard, especially from the highs. But if you look at the two charts, this chart was mirroring oil all the way to here, and then you started to see the collapse in gold itself. And ever since then, it's really diverged off of the USO, which, as you can see, the USO is right at the 52-week highs here. In fact, made a new 52-week high today. So we are continuing to monitor that. We aren't ready to jump on the short side of oil again, although it will be coming in the near term. I am eyeing the DUG again, DUG being a two-time short oil and gas stocks, but I'm not ready to do it yet. You had a nice move here. Now you're getting a retrace, a little pullback and pause. There will be a portion at some point, and I will announce it in the video when I'm looking to do it. So stay tuned, as always, and continue to follow the videos. Now let's take a look at the market overall. Let's get right into this nitty-gritty here. And let's look at the SPY first on the daily. Now, what are we seeing here? Well, here's where we had our turn date, and you see the ugly red candle formation. And you've seen the sell-off, and then the little bounce back late in the day. And this is, again, all of Friday, this candle. And then today. So you've had a two pullback, but it's small pullbacks. This is small potatoes at this stage. We don't even count this as, it may be the change in polarity that you're seeing on a turn date, and that may be what's happening, but this by no stretch signals the move that we've been expecting, and we will continue to watch this, as we do think that there may be a pullback. We're not sure the size of it yet, but it should be a decent pullback over the next few weeks, as people realize that things are not all fine and dandy, and that they just are not as good as people are making it out, nor are these stocks making it out to be. You've had technology. We talked about this about 2 weeks ago, how we saw rotation happening, and what a rotation it's been. We saw the ag stocks and some of the gold stocks, money getting pulled out of those and flying into high-tech technology plays like Apple and RIM and Baidu. Well, Research in Motion today hit a double top area and pulled back, and we are monitoring this as well. Not sure if I can actually show you. I have to go back in the chart here. Here's the double top area from the last move, and it's just a little too small to show on this chart because I have to keep it in the box. Oh, excuse me, that's not even it. Let's flip back even further here. And there we go. That's it. Up here. All right, so right around 135 to 137 was the double top on the Research in Motion. And in any case, this is where we are right now, nearing the double top area on Research in Motion, and we did hit it today, and we saw a pullback, so we got to keep track of that. Is that going to hold? Is this a near-term signal that the market's ready to pull in? Because these technology stocks will have to fall if we're going to see a pullback in the markets. They just can't stay this strong. Google again today, and this was partly on the Microsoft dropping out of the Yahoo, because again, remember, if Yahoo and Microsoft join forces, they rival Google. And so Google was strong today, up $13.50 on that, the fact that deal fell through. But look at the move on Google. This is getting way too extended at this stage of the game, and it's very near a possible short. Baidu, the same thing. From the lows down here, you're seeing moves in these stocks, these large cap techs, like 50% moves. Apple Computer taking another huge move, and look at how far this has come, from $115 to $185. That's a huge move, no doubt about it. And in our opinion, this is getting to the near-term area where we're going to start to look to go on the short side as well. Again, you can play that with the QID, which is making a possible bottom down here. This is 2 times short the NASDAQ. But again, you got to be careful because it's 2 times short the QQQ, which is the NASDAQ 100. And it moves 2 times as much. So if you're right, it's great. If you're wrong, you get pounded. So obviously take a close eye at that and understand the risks involved. And we always say consult your financial advisor before making any decision. These videos are just for informational purposes and just for fun, and they should not be construed as investment advice whatsoever in any shape, way, or form. Just for fun here. So in any case, always consult that financial advisor. He is your best friend when it comes to making decisions, and you should always take a chat with him before doing anything. Now, let's take a look at the NASDAQ on the daily, because this is where it gets interesting here. Again, we inched close to this 200, but you're seeing the pullback again as our turn date came on May 2nd, and now again on May 5th and 6th, we're looking for continued downside. So we have to see if this happens. Now, this week is devoid of a lot of economic news. There's not a lot of stimulus. Tomorrow we have Cisco earnings after the bell, which may be a little bit of help to technology, showing us where we're going. But Cisco really doesn't play that much in the scheme of things. Really, it's the four main players: Google, Baidu, Apple, and RIM. For large cap tech. Then you have the financials, obviously, that are a big deal right now because of the credit crunch. So keep an eye on that, but we're still looking for a pullback in the NASDAQ and in the SPY and so forth. As you can see, here's the SPY chart. And again, you got to expect a pullback here as we've rallied way too much, and things are not as good as people make it out, and that's a signal. That's the psychological indicator now you want to look for. And as traders, we always try to follow that, plus our proprietary analysis, plus the technical tools we use. I encourage everyone to come join the Swing Trade Alerts, the Intraday E-mini chat room, and the stock chat room, and do the consulting. The webinar we may have up for tomorrow, but institutions, get on board with that consulting before we're too full to take you. Take care. Have a wonderful day. We'll talk to you tomorrow.